So guys, welcome to VRD Nation. Through this channel, we are trying to educate our fellow investors and traders on every topic that pertains to investing and trading using real life examples, case studies, real life trades, animations, right? So we are trying everything that we can to make things simple. So if you're here for the first time, you're hearing me for the first time, do not forget to subscribe. So guys, in the world of trading, this jargon gets thrown around a lot. It's called high probability trades, right? Everybody wants to take a high probability trade, but very few people actually understand what it really means. So in this video, we will break down this concept. We will explain that using very simple examples. So a high probability trade basically means that a trade has a very high chance of working out. But here is the thing. Who determines the probability? Is it you? Is it me? Is it somebody else? How can someone say that a trade has 80% chance of working out or 90% chance of working out? So you see what I mean here, right? There is a lot of subjectivity here. What you may call as a high probability trade, I may look at the same setup and I can call it as a low probability trade. So what we need here is an objective way of looking at this so that everyone looking at it would arrive at the same conclusion. So how do we solve this problem? Well, think of any stock like your old friend, right? A person that you have known for a long time. And because you know them so well, you can tell with a fair degree of confidence that how that person would usually behave. So you can say that, okay, I know this person usually is a very reliable person, or usually this person is very cool-headed or very hot-tempered, right? Or this person is usually on time, or this person is usually late. And how can you know all that? Because you know their personality, right? You know their history. You have spent a lot of time together. You have seen how they have behaved over the years. In the same way, every stock has a personality, and we can learn about that by looking at the way they have behaved in the past. Some stocks are volatile, whereas some stocks are very stable. Some stocks are trending, whereas some stocks are range bound. Some stocks react to the earnings very much, whereas some stocks do not react to their earnings at all. So a high probability trade is nothing but the trade taken based on the personality of the stock. And here is how it is done. We first look at the historical performance of the stock, and based on that we calculate the standard deviation, which is a measure of how much movement the stock usually makes. And then we plot something called as a bell curve. And using this bell curve, we can deduce what is most likely to happen and what is very unlikely to happen. For example, based on the history of Tata Motors, we can say that, okay, yeah, this stock has been very volatile. It can easily come down 10%. It can easily go up 10%. We will not be surprised. But if we, let's say, look at a stock like Reliance or ITC, if this stock falls down 10% or 15 or 20% in one trading session, all hell will break loose. We will definitely be very surprised, right? So based on the history of these stocks, we know what to expect from these stocks. Now we have made dedicated videos on bell curve and standard deviation. You might want to check them out. Now let me show you the application of this concept in real life. Now I'm going to take a couple of examples from this week itself so that the concept becomes very clear. So this trade that I'm going to talk about, I took it on Monday, this Monday, I believe the 11th. So what happened was that the market gapped down this morning and there was some weakness in the global markets as well. But because the market had formed some kind of a base and Bank Nifty was looking a little bit stronger than Nifty itself, I took a long trade on Bank Nifty with the expectation that Bank Nifty will go up and I will make some money. Now, at this point of time right here, my view is that Bank Nifty would go up, but you can look at the same setup, the exact same setup, and you can say that I am expecting the weakness to continue and I am expecting Bank Nifty to go down, right? So even though I ended up making money on this particular trade, statistically speaking, I have no way to say that whether I am right or you are right, right? So the trade that I am taking here can be based on my experience, based on my skill, but probabilistically speaking, I don't have any edge in this trade. Now let me give you another example where you and I both can agree, okay? So this is the daily chart of Reliance, and as you can see that Reliance was trading in some range for some time and then it broke out of the range and now it is trading in this new range, okay? So instead of saying that, okay, what will Reliance do tomorrow? Will it go up or go down? Which is essentially a 50-50 probability trade. I can take a look at the historical performance of Reliance, right? So what I can say is that, okay, all right, so let's see. Reliance has moved up what? In a couple of months, it has moved up about 44%. So let's say in a month, on an average, it moves about 20%. Okay. Same is the case here. How much has it gone down lately? It has gone down about 20% from the top. Okay. So if I take a trade that, okay, I don't know whether Reliance will go up or go down tomorrow, but based on the statistical performance of Reliance in the past 1 year or so, it is very unlikely for Reliance to make a move above 20% or below 20%. So if my trade is predicated on the fact that as long as Reliance stays, let's say 20% from here, so let's say in this case 3000. Okay, so if Reliance stays in this range, I will make money. I don't know whether it will go up, it will go down, it will stay in the range. Whatever it does, as long as this range stays intact, I will make money, right? So would you agree that statistically speaking, the probability of this trade working out is clearly much higher as compared to, let's say, saying that Reliance will go up or go down, right? And I have applied the exact same concept on an intraday basis just yesterday. So yesterday I was completely wrong about my view of the market. I was expecting the market to go up, whereas actually the market came down. But my overarching theme of the day was that no matter what the market does, whether it goes up or goes down, as long as it stays in this broad range, I want to make money. Right? So in spite of me being completely wrong and also making some expensive mistakes, I still ended up in the profit. This is yesterday, by the way. I still ended up in profit. Why? Was it because of my intelligence? Was it because of my, insight into what the market would do? No, I was wrong. I was completely wrong. But because the probability was working in my favor, I still ended up making some money. Right, guys? So that is essentially what I wanted to share in this video. The idea behind taking a high probability trade, which is predicated on how a stock or index has moved in the past. And once we understand the personality of that stock, once we understand the predictability, then based on that, we can take certain trades which have a higher likelihood of success. All right. So I hope that you guys understood the core idea behind taking high probability trades.